Hey, what's up, everybody? Welcome, welcome. We're going to start in about 10 minutes here with Matt Maley, Chief Market Strategist at Miller Tabak Equity Firm, as seen on CNBC, Bloomberg, Yahoo Finance, all these other places. Matt Maley, as a Chief Market Strategist, will be here with us today. We're only going to be here for an hour. That's the amount of time that he has, but we're going to make sure that you have a good time, and by the time that we're done with this, I guarantee you will have a much better understanding of trading options, stocks, the markets, and a lot of other small things that you'll be catching on along the way. So stick with us, guys, here a little bit, 9-10 minutes, and we'll get the show started for you guys. What up, everybody? Thanks a lot. Thanks for being here. Great session we have for you planned with Matt Maley, Chief Market Strategist at Miller Tabak, private equity firm, guys. We're going to have him here for a little bit of time. So what I'm going to do, guys, is that in the meantime, all right, go ahead in the chat. Let me know when you're ready to start. All right. Let me know in the chat when you're ready to start. Also, let me know where you are tuning in from, right? Let us know in the chat, guys, on the Zoom and on the YouTube. Let's see. Ethereum is ready to go. Patrick, you're asking when we started. We're live, baby. Rip City, Sun Valley, Idaho. What's up, man? What's up, Red? How you doing, man? Somebody tell me where this market is going. Matt Maley is your guy. All right, Red. Let's go to the Zoom chat. Hey, let me know when you're ready also, by the way, too. All right. MCR, Georgia. What's up? Edwin, anytime. Let's do it. WC Tucker, Dallas. Artemi, Miami. Shout out. E. Davis, Ohio. K. Jofield, San Diego. Manitoba. Jersey, baby. Let's go. Let's go, man. We have a great session planned for you today, guys. Let me go ahead and introduce our Matt Maley, definitely somebody that I've been learning a lot from for past year or so. And guys, if you are not familiar with Matt Maley, he's a chief market strategist at Miller Tabak private equity firm. He's been in the game for 40 years on Wall Street, right? In Merrill Lynch, Salomon Brothers, very, very well experienced gentleman here in the stock market. So he's going to be here with us today. He has a great session planned for you guys. He does have, I know that you guys are going to email me later about this, so I'll just get this out of the way. Yes, Matt Maley does have stock pick newsletters where you get trade ideas. He also has a chat room. He's going to talk about that, but I just want you guys to know, I'll drop the contact. Any questions, let me know. Mike Alexson, what's up, brother? How you doing? Jess, I am Crow. Let's go, guys. I think we're ready to start. Let me go ahead and bring in Mr. Matt Maley. Whenever he is ready, he'll let us know, guys. Are we good, Matt? Can you hear me?
What's going on, Rodrigo? How are you? Excuse me. How are you?
It's going all right, man. How are you
doing?
Crazy
day today, so my voice is a little.
Is screaming a lot at the screen today, or what?
It was a good day. We had some really, believe it or not, it was a very, very good day for our chat room for the tier 3 thing, because we came in and said this market's overdone right at midday, and I also said it was overdone a little early, so that didn't work. But when you're trading in those options like we do in the tier 4, it worked out for a profitable day for us. So it was a good one, and that's really what we're trying to do, because this market volatility is not going away anytime soon. It won't be as wild as today many times, but it's such a great time for individual traders, because in years past, or in decades past, individual traders have not had a chance to take advantage of these big wild swings, because they can only buy things in one direction on the buy side. Shorting stocks, and that's very, very dicey to do. I don't really recommend that for anybody, because literally, theoretically, if you buy a stock for $10 and it goes to zero, you lose $10. If you short a stock at $10, it can go to infinity. I mean, you can lose 100%, 200%, 300%. On the long side, all you can lose is 100%. So we don't really short, but you can take advantage in options, whether it be put options or in call options of negative bets, which is kind of funny, but also in these inverse ETFs. In fact, on the tier 2, just the tier 2, we made 20% in a week in the inverse ETFs on the financial stocks last week. And those who waited to today made 40% in 6 trading days. And that's without any options. There's just ways that we can do it nowadays, where back in 1999, they're just if you wanted to buy put options, you had to go out 3 months or so, and that was very expensive. So we can now play on both sides of the market and take advantage of the volatility, something that individual traders really couldn't do until now.
I know that you're a beast in volatility. Like, I mean, you've called out the past 2, 3 corrections like on the dot, and so that's something that like everybody here, obviously, we're familiar with that. You obviously have the record for the biggest winner here at Benzinga, that Viacom trade, that 5,000% gainer. So definitely, and also a lot of people know you from CNBC Asia, Bloomberg. I know that you do that quite often. So Matt, I think if you want, go ahead and take over the screen. I know you have something sweet planned for the fellas here.
Great. Yeah, we'll just go right into it here. I mean, usually I kind of do a little bit of we usually just try to do this for an hour and then we always go over, but this time we really only have about an hour. So I want to really get right into it. And really talk about, I'll do my little spiel because I want you to know who the heck I am and where the heck why in the world you should listen to me. And but more, I'm going to avoid some much of the kind of official presentation and really focus more on what's going on in the overall markets. Whoops, let me just pull that back up there. Sorry about that. In the overall markets. So and to give you some ideas of what we're thinking about, what I'm thinking about in the days and weeks ahead. For what I think will continue to be a lot of volatility. But anyway, so again, I write these market letters for Benzinga, and there's a tier 1, which is a short-term, long-term, very long-term, multiple years. That's kind of that big bucket that you have, that long-term trading thing. But for people who want to be more active, we also have a tier 2 where we that tier 1 thing is send out 2 ideas every month, and then. On the tier 2, we send out an idea every week, so 4 ideas in a week, and they're a little bit longer term. They're a little bit shorter term, but not very short term. They're in some cases they are very short term, like the FAZ, the 3 times inverse ETF that I picked last week. That was something I usually don't do. Usually I go more like 3 to 6 months out, or at least a month or 2 out. And then we go to the tier 3, where it's a call I do Monday, Wednesday, and Friday at noontime for about a half an hour, 20 minutes or so. Today went a little bit longer, where we talk about what I'm seeing in the markets today, and give out more ideas, kind of shorter term, whether it be just a couple of weeks, and in some cases even just a couple of days. And then finally we have the chat room that I'm in all day long, where we have investors, and we're just talking about ideas. And then we can expound on it, kind of the longer term ideas, intermediate term ideas, and then we talk about what we can buy and sell in the options market over just the next few days. And this has worked out very, very well for us in the last couple of months.
Right.
So anyway, but my background is that I'm not your typical strategist. I'm also a strategist at Miller Tabak. I will be, by the way, if you're up bright and early tomorrow morning, I'll be on at about 5 o'clock on CNBC. You never know. I've had several ones. CNA has also asked me to be on out in Asia. That'll be later this evening. Here on the East Coast this evening. But if you're out in Asia, you'll see that this morning. And then for those in Europe, I'll be on Levante at about 9 o'clock Eastern time. I think that's about 3 o'clock your time. Anyway, these are the types of, but going back to what I was saying, I'm a strategist. It's look at the macro things, but I'm not the typical one where these people who look at the theoretical things, the former analysts, sector analysts, or the former economists. Nothing wrong with those people. They follow the fundamentals, and that's very, very important. And of course, I follow the fundamentals, very important. But I used most of my first 25 years in the business. I stayed on trading desk. I was on the Solomon Brothers trading desk, which was, they ended up being bought up by Travelers, which is now Citigroup. But we had been the most powerful trading desk in the 70s, 80s, and 90s. I was there for 15 years in the 80s and 90s, and then moved to Merrill Lynch, which was certainly the biggest one, and also a very powerful trading desk. And on those trading desks, I covered the institutional trading desk, the customers, institutional money managers of the biggest mutual funds, hedge funds, insurance companies, and other money managers. And you really learn how to be what really makes the market work, not what should make it work. And that's the one thing that I've said a million times. If you've ever heard me speak in any kind of these presentations, hear it on Wall Street all the time, the market is always right. There couldn't be anything more wrong than that saying, okay? That yes, the market is always right eventually. And we're just finding that out now. I mean, look what's going on with the market that was wrong. They misinterpreted what was going on with the Fed in the last 2 months or so. And now that the and well, we'll talk about that a little bit more, but we've seen it a million times. You've seen it. The stock market was dead wrong in 2000. It was way too high. In 2003, it was way too low. Individual stocks get way ahead of themselves. Individual stocks get way oversold. We've seen it a million times. That's where people make their big money, is when the market is wrong. Okay, when the market throws a baby out with the bathwater and a stock or a market or several stocks get completely sold off, and that's where Warren Buffett has made his millions, his billions, I should say. I mean, when there was nobody left to buy, he came in and bought. And whether it be individual companies, big size positions in stocks, or buying like he did with Goldman Sachs at the depths of the financial crisis, where he issued them he was the only buyer. He got convertible bonds, converted into stock, convertible bonds that paid 10% a year. Imagine getting 10% a year for bonds guaranteed for 10 years of the last 10 years when interest rates have been near zero. And then at the end, he got the stock because they were convertible bonds, which also went up, several 100%. So this is the way that the really smart guys make their big returns. They make it a key turning points, and we're at one of those right now. I'll just talk about one last thing before I move on to what's going on right now. And that is that through my market letters, one of the biggest things I try to do is not just give people good picks, whether it be in the picks individual stocks or in some of the options areas, and try to especially get those ones at the key turning points. I mean, I turned bullish on the energy stocks back in 16 months ago in October of 2020. Everybody hated the group, everybody. I was pounding the table. Why? Because I didn't follow just the fundamentals. The fundamentals said, we're not going to buy energy stocks. Fossil fuels are dead. And I was like, no, the new administration coming in is going to be cutting back on spending. And we'd already seen cutting back on spending on fossil fuels all over the world leading into that election. I mean, it didn't just start with President Biden being elected. Okay, it happened in Russia. It happened in the Saudis. And I also knew, though, that as much as I want us to get away from fossil fuels, believe me, I'm a biggest proponent of that. But I also knew it's going to take at least 2 decades, certainly more than a decade. Okay, so I'm not going to be investing now on what's going to happen 10 years from now, that fossil fuels will go away. The IAE, International Energy Association, is saying that at the end of this decade, 8 years from now, demand for fossil fuels will still be within 5% of the pre-pandemic levels. Okay, these things aren't going away. We want them to go away immediately, but people just kind of lost their minds. They thought that we could go from fossil fuels to green fuels overnight. Can't happen, won't happen. And therefore, I was pounding the table. Not only that, is that all the institutions had sold it. Nobody was left to buy this. I mean, sorry, there's nobody left to sell the stocks. All the institutions had gotten down to tiny positions in the energy sector. The futures traders, they were all bearish. There was something like 6 or 7% bulls among futures traders. There was nobody left to sell in the futures, the short-term futures. And then sentiment, that was on the sentiment side. And then on the positioning side, all those futures traders were short. So everybody was on one side of the boat, and everybody was saying, avoid these stocks. I went in pounding the table 16 months ago and said, you got to buy these stocks. They've rallied extraordinarily since then. Most of Wall Street jumped on the band, or some of Wall Street jumped on the bandwagon 3 or 4 months later at the beginning of 2021. That's great, but they missed half the rally, half. Okay, and then they're bragging about how they were so smart calling it last January, but they missed half the rally, and some didn't even get into more. You got the Bank of Montreal and Schwab. They didn't get in until the spring. I mean, they missed more than half the rally. The point is, there's a lot of really good people on Wall Street and really good analysis out there, but they tend to play it safe because that's what they're paid to do. They would say they know they still look good because, hey, if you bought oil stocks when they told you to buy them, you did really well. They just didn't do as well as they did if you did it when we talked about it. And the reason they do that is they want to make sure that it's really happening, that the turnaround is really happening. They're late to the game. Warren Buffett doesn't wait until half the move takes place. He gets in at the bottom. And you have to look at more than just fundamentals. You've got to look at those sentiment issues. You've got to look at the positioning. You've got to look at technical analysis, which is more than just a bunch of lines drawn on a chart, which we'll talk about later. But these are the things that we look at. So what are the and it just goes by, well, what are people doing now? When you have a market as volatile as it is, people are just flat out guessing. what's going on, or when the next move's going to be. Yeah.
Hey, Matt, really quick, do you mind just taking over the screen here and share over your Bloomberg terminal? And for those that are asking in the chat, guys, so the newsletters, the tier one is, it's one trade every 2 weeks, the tier one. That's the one that's 7 a month. Then the tier two, after you complete that checkout, it's going to auto refresh. It's going to take you automatically to the tier two. That's one trade every week. And that is Alpha Matt Maley as well. And then after you complete that checkout, it takes you to the tier three, which is the live call with Matt Maley Monday, Wednesday, Friday. You get 3 to 5 trade ideas, market updates, sector updates, all that stuff. It's all on the same checkout. Any questions about the chat room, guys, just send me an email. All right. And I think that takes care of the questions, Matt. Let's go ahead and proceed here with your presentation.
Okay, I didn't realize you guys weren't looking. I had a presentation up and it wasn't there. And that was my fault because I didn't share my screen. So now I am. I apologize for that. But it didn't really matter. It was just words. I wasn't talking about the specific things. But we'll go over to my little presentation real quickly. But just to talk about, bang, here we go. Oops. I want this. Okay, now. Again, it's now, I don't want to be doing guesses, all right? We want to maybe talking about things that are really going on. Now, what is going on right now? Okay, but no, I was pounding the table, in October, November, especially in November, December, when the Fed had changed their mind. Everybody's talking about this now, everybody, but they've been talking about it for a week. I've been talking about it for 3 or 4 months, okay? The Fed has signaled that they're going to change their policy from not just going from loosening to neutral to tightening. They're going from their most massive stimulative program ever straight to tightening. Okay, I mean it's going to happen quick. It's going to happen somewhat gradually, but not. I mean it didn't happen all at once, but it's happening a lot quicker than anybody thought they were, and they're not stopping at neutral at all. I mean we know what they're doing. They're tapering back on QE. They're going to start raising interest rates, and they're going to start shrinking their balance sheet. All of this is negative, especially when the stock market is expensive as it is. It's trading again now. It's getting now because of the big sell-off we had the last couple of days or last couple of weeks. But it was trading at 21 times earnings and more than 3 times sales. That's the most expensive ever times sales. You can fake earnings. You can do write-offs and these other things. You can't fake sales. Revenues are revenues unless you're completely lying. You go to jail. Your revenues are what they are. Same thing with market cap time. Market cap is a percentage of GDP. The most expensive ever. That's of course Warren Buffett's favorite valuation level. The point is the stock market had been taken to a level by the Fed when the Fed had presented all that great excess liquidity, which we needed badly because the economy had completely shut down, the whole global economy. Not only that, the credit markets were frozen up. The financial system was freezing up, not because of the banks were in big trouble like it was during the great financial crisis, but it was just as serious. Well, I'm going to say it wasn't just as serious because once they got things rolling again, we didn't have to worry about the banks going belly up. But at the same time, we were worried about things freezing up. And the Fed needed to do that. They did the right thing. The problem is they kept the stimulus going longer, the emergency level of stimulus long after the emergency had ended. Again, this is something you're hearing all over the place right now. And there weren't that many of us who were talking about it, 3 or 4 months ago when I was pounding the table on this stuff. And the problem is, but the biggest issue that people are missing is that we had leverage, and this is what really comes down to leverage. Okay, when you have all that liquidity in the system, and everybody thinks the Fed wants to push the market higher, then not only are they willing to buy lots of stocks hand over fist and take them to crazy levels. Crazy valuation levels. They're also willing to add leverage. They have lots of confidence to add leverage. And one of the good sayings on Wall Street is that margin debt, which is margin debt. We heard about margin calls. That's what we've gotten in the last couple of days. Some people have been forced to sell. But margin debt, that's a good indication of how much leverage there is in the system. And the people say, record margin debt is a lousy timing tool. They're absolutely correct. In fact, higher margin, you get to an all-time high in margin debt and it keeps going higher, that's bullish for the stock market. It's only when the thing starts to roll over. We saw that happen here in the dot-com bubble. We saw that in the after the housing bubble, 2007, and the deep correction we saw in 2018, the last time the Fed tightened, and now we're seeing it now with the newest Fed tightening thing. change to Fed tightening. This is what happens. So therefore, we have these record amounts of leverage that had pushed the market artificially above the. And the thing was, is saying, well, the economy's still good. Well, that's fine. But the problem was that the economy was way up here, and sorry, the stock market was way up here, and the economy was down here. Well, the economy started playing catch up, which was great. The problem is when the emergency was over, which would have allowed the economy to fully catch up, the Fed didn't pull back. They just kept going. So it's never been able to catch up. So now, even if the economy stays steady or even improves slightly, like it is expected to do, the stock market still has to come down because it's too far ahead of it. It's a very unique situation. Usually, when the stock market was over, they're both at least close to each other. We have to wait for the stock market. We see signs that the stock market is rolling over for us to be worried about that the economy is rolling over to worry about the stock market. Although the stock market actually rolls over quicker and earlier, but the first is the signs of that kind of stuff. This time, it's not going to be the economy; it's the Fed, the Fed's liquidity, that steroids that the Fed had held up. And like anything else, when somebody takes steroids, they're lifting weights, they start taking less steroids. Even if they're still on them, they get weaker. And of course, if they come completely off them, even though they're still strong, I mean, they were weightlifters even before they took the steroids, they still are weaker than the wood. So the stock market works like that. It has to come back down. Now, we've had a big correction in the stock market so far. At today's lows, the S&P was down over 10%, and the NASDAQ was down about 17 or 18%, and the Russell 2000 small cap index was down over 20%. But that's still not enough to wring out all of the leverage out of the market. So it's going to take a while for that to do it. And just think about it. Not only do we have the Federal Reserve cutting back on it much more aggressively than they had initially said they were going to cut back, we also have China. China, they've given a little respite here. They're not because they have the Olympics coming up. But after the Olympics, and especially after their Congress, which is shortly thereafter, their 5-year Congress, they're going to go back in. At least it seems like they're going to go back in and clamp down. They went, let's face it, we all know what happened. They started with Alibaba, then they went to the other tech sector, started clamping down there, the real estate sector, then the gaming sector, then the video gaming sector, the education sector. Every few weeks, they clamped down on another one. And this, obviously the real estate one was the really big one. They've continued to do that. But they've kind of pulled back a little bit now because they don't want to be causing problems while they're having their Olympics and in front of the whole world. And same thing with their 5-year Congress. Once that steps back, but the point is, we have the biggest economy in the world with the Fed pulling back on monetary stimulus, and the Biden administration doesn't look like they're going to get any new big fiscal stimulus. So we got that going. So we got the biggest economy in the world pulling back. And then we have China, the second biggest economy in the world. And what are they doing? And after more than a decade of encouraging debt, encouraging leverage, encouraging risk taking, they're clamping down on all three. Two biggest economies in the world. This is going to last for a while, this pullback in the stock market. But it won't happen all at once. It will take time. And that's what we really want to talk about. I want to get away from the rest of the presentation because that I usually give, because I know people really want to get into what's really going on right now. So I'm going to move over to the this is my Bloomberg page, and just talk about what we're seeing right now and why I think this bounce that we've seen today is a good one, and that's nice. And it's something we call. It was funny, as I said, in the chat room today, we were going in. Somebody asked me. I said, "Listen, let's look at the QQQ calls." And I thought it was overdone at 10:30. Market ran up. We bought some calls. The stock market it ran up nicely, made some money in those. Then it came back down. Okay, actually took, and then by the time we sold them to get out of it, it was a quick sale. I said right from the start, this is going to be very nimble. We're not going to take any major losses. These things come down, we're going to get out, and we got out. It rallied up a little bit again. We bought a tiny amount, came back down. But finally, later in the day, middle of the day, we started adding to the QQQ calls. And of course, the QQQ options are the QQQs are the ETF for the NASDAQ 100. The NASDAQ 100 is a small, it's the biggest part, biggest capitalized stocks of the entire NASDAQ composite. So it's the 100 biggest stocks, and many of those big cap tech names are in that. And that's why I was really looking at, because they were the ones that got hit the hardest. I thought they would be the ones that come back the quickest. We also had, one of the people in the chat room asked me, so what do you think about Apple and Microsoft? And I said, well, if we break above certain levels, this is in the chat room that we're talking about. I'm in it all day long from 9 o'clock or sometimes before 9 o'clock until 4:30 when, a half hour or so after the market closes. Sometimes I'm actually in there in the middle of the day. But the point is, we're talking about this all day long. And I just said, you can come in. I just said, listen, if the NASDAQ breaks above these key resistance levels, it's going to take off. And no matter what you think about Apple and Microsoft, they're going to rally as well. And sure enough, and one person on the chat said, well, Microsoft's going to report. He was really worried about them being reporting on their earnings, which comes tomorrow night. Okay. And I said, that's fine. But if you want to buy some short-term calls, buy for the end of this week. You don't have to hold them to the end of this week. But this thing is so washed out. It's so overdone. You should indeed buy them. It wasn't one of my official picks. I didn't put it up I have a separate screen for the picks that I put up. I didn't put it up there, but they asked me and I said, those are the ones you should buy. The Apple calls and Microsoft calls. Well, guess what? Microsoft rallied 6%. Now, I didn't catch it right at the exact low. So it was probably 5% from where we were talking about it. But and I didn't buy them myself, but those must have doubled in just a few hours. These are the types of things. What we're trying to do is not just, like I said, we're trying to make money on both sides of the market because we have the ability to do it. In the old days, if you wanted to buy Microsoft puts in January, the next one you could buy would expire in March. Okay, and so it was like, well, the time value of those options make them very, very expensive. Now, Microsoft, you can buy them any week. You can buy them out 1 week. You can buy them out 2 weeks. Literally every single week through the rest of the year, basically. And obviously, the ones you go out a certain distance, you go out 3 months or 4 months, they're not very liquid. You go out 6 months and 12 months, those are leaps, and those actually get more liquid again. But it's kind of weird. But the point is, you can buy as anytime you want. You don't have to pay those crazy exorbitant prices that you used to have to pay to buy those call options. In this case, the call options. Earlier, just a couple of weeks ago, I really want to talk about this Microsoft. We talked about another reason why I thought the market would go down, and it was the selling done by the Mr. Nadella, who's the CEO. This guy has done a great job. He did nothing wrong, nothing unethical by any stretch of the imagination. But he sold 3/4 of his personal position in Microsoft. That was $374 million. It started off and made all the headlines when he sold half right before Thanksgiving, but it came out a couple weeks later that he sold even more. I mean, this guy saved himself over $50 million. Why? He didn't do anything, not even illegal, not even anything unethical. It's not like, well, unless we find out that, when they report tomorrow that they have some sort of, big accounting scandal, I just don't see that happening. This is just something he just said, hey, this is getting too high. This is out of control. The Fed, my assumption is he saw what the Fed, how much the Fed's liquidity helped the marketplace. And it wasn't just the Fed, it was the global central banks. And now this is disappearing. My stock is way ahead of itself. Stocks of great companies go down. Amazon changed the world in the last 25 years, completely changed the world. It's seen 24 corrections of 20 to 60%, okay? Because stocks, really great stocks that change the world, okay? Really great, the stocks are really great companies. People get so enthusiastic about them, whether the Fed's providing a lot of liquidity or not, and they get way ahead of themselves. So every once in a while, they have to come back down. It's happened to Apple, Microsoft, NVIDIA, Tesla, you name it, every big stock, Facebook, they've all seen a gazillion serious pullbacks. That's why this guy saw it, okay? That's why I believe he sold his stock. He sold a big chunk of his stock. Didn't sell all of it, but it's kind of like what the partners of Goldman Sachs did in 1999, okay? They sold a big chunk of their stocks when they went public at an IPO. Great. Why did they do that? After being private for 100 years? Because they saw what was going on in the tech bubble. Why not? Okay. What happens less than 6 months later? Stock market tanked. Brookstone. Okay, Blackstone, not BlackRock, but Blackstone, which is a private equity company, probably the best one around, or certainly one of the 2 or 3 best in the world. All right, they had been a private company, a partnership for 25 years. They went public. Their partners sold big chunks of shares. They still hold on to some, sold big chunks of shares in 2007, the summer of 2007. What happened 3 months later? The stock market topped out because they saw what was coming. Thing went straight down. Took years before either one of those stocks came all the way back. They still went back and they still held on to some of their stock. But guess what? They had cashed in on some and they were able to play with that money and invested in other things, especially when the market bottomed out. I'll go on and on, but I mean, Glencore did the same thing in 2011, the great commodities firm just before the bear market of commodities started in that year, this 8-year bear market. They went public in the spring of 2011. Their partners cashed in. Sam Zell sold his real estate company in 2006, I think it was, just before the real estate thing. Now, that wasn't an IPO. He just completely sold his company. But again, people... This is what he does. I mean, he runs that company. He sold his company. He's like, oh, well, there's some accounting things I wanted to do. Come on. He knew it was ridiculous. He was that smart. He says, I'm getting out. And that's what the CEO of Microsoft did. Again, he did not, none of these people did anything remotely unethical. Okay, they didn't lie about what was going on. The stocks and their markets got pushed up on their own, not because Goldman Sachs, lied to everybody and told everybody that the stock market was going to go a lot higher, or not that, real estate, these people, they just saw what was going on. They're in the business, they're insiders, and they say, hey, these stocks are not going to hold up at these levels for a while. They're actually going to come down for a while, not just for a couple of months. They're going to come down. And that stuff about Nadella, the Microsoft CEO, selling because it was because the state of Washington was raising their capital gains tax to 7%. Microsoft went up average 32, or maybe it was 32 or 33% average every year for the last 9 years. Okay, his worst year was 12% gain, right? Anything like that, anything between 12 and 33 is going to more than make up for any rise in capital gains. He would not sell that if he thought it was just going down for a couple of weeks. The only reason why he'd sell is because he felt that this change in policy was going to be something that kept stocks, that would knock his stock down and keep it down for a while. Doesn't mean it's not a good company. Doesn't mean their prospects aren't good. I talked about the 24 corrections of 20 to 60% in Amazon. That didn't even count the 90% correction, the 90% decline it saw from the 1999 high until I think it was 2001. It rolled over earlier than everybody else and bottomed earlier than most other people. Okay, 90%. And their revenues went through the roof. So it wasn't like the company had problems. It just got to ridiculous valuations. Now it overshot to the downside, and that's what we always like to take care of. Now, going back to what's going on in the overall stock market, that is what we've done, and we've had several instances in the last couple of months where I'll just tell you. I'll go back to my little presentation, see if I can pull this up. What we did with the stock market and the QQQ options. I told you about the QQQs today. Wait a minute here. Hold on a second. Okay, I'm not sure why. There we go. Okay, let's see if I can find it here. Okay, here we go. Well, that was November. We did a little bit later than that. Hold on. I'm sorry, but here. Okay, here we go. So we came in in the middle of December, and on the tier 4 call, on the tier 4 chat room, and the stock market, everybody was worried about that Chairman Powell was going to say something really negative. Remember, because all these other members of the Federal Reserve were coming out saying, "Hey, we're going to be more aggressive in tapering back on QE. We're going to raise rates sooner and faster than anybody thought." And then right before their December 15th meeting, they started leaking that they were also shrink their balance sheet. And sure enough, the stock market came down pretty hard. I came in though, and I said, listen, this thing's probably priced in. This was, oops, let me give you the slide so you can see it better. Oops, there we go. See this? 2 o'clock, there's a 2 o'clock right in here. The Fed gave their announcement. At 2:30 right in here, Powell began his program, his press conference. I came in and said, right at 1:30, okay, right about 1:30, right here. So half an hour before, I'm sorry, take it back. It was 2 o'clock here, 2 o'clock here when they made their announcement, and 2:30 right here when he began to speak. But right here at 1:30, I came in and said, okay, everything's priced in. Let's go out and buy this. All this negative news is priced in, at least on a very short-term basis. And because everybody's positioned on the other side. I wasn't just using the fundamentals. I was looking at positioning. I was looking at sentiment. It become very bearish. So we came out and I said, let's buy the QQQ December 17th, 392 call options. They shot up. Okay, they shot up after the announcement. They settled back in a little bit, and then Powell started speaking, and they shot higher. Okay. The next day, after the market, before the market opened, I came on the chat room and I said, we're selling these things right at the opening. Now, I don't know if everybody got the exact top. Probably nobody got the exact top, but they, anywhere in here. So if you got the exact top, you got 361% in just a few hours. From 1:30 in trading hour time, it was less than 3 hours. Okay, 361%. Okay, and again, so maybe you made only 325. But that worked out really well. Again, if you were just looking at the fundamentals, things looked horrible, just like they did for the energy stocks back in the fall of 2020. But if you look at all these other issues, you can really make these, see these changes when they're coming. So what happens 2 days later? Okay, now here's the put again. We're coming. Wait, whoop. So let me go back here. Remember, we bought the call option here, and the market rallied up. Now, the next day, we looked at the puts. Now puts, of course, go down when the market goes up. So the puts have gone down. Here's 2 days later that the market has gone up more. So the puts have gone down. Okay, the calls went up. We made a lot of money on the calls. We sold them. Then I came in here in the last hour of trading, and I said, this market is oversold. This market is overbought. It has way too much enthusiasm. Even though we got a buy the news reaction to Powell's comments. But his story was still negative. Them raising interest rates, them tightening is going to be negative for the stock market. And forget about this stuff. It seems like every other day I read a story out and they kind of play with things to make it look like the market actually goes up when the Fed tightens. That's just not the case, especially in an expensive market. All right. Sometimes there's a delay between when they start tightening and when the market goes down. But when the market's expensive, it almost always goes down immediately, and it always goes down. Okay, at least in the last 50 years. So anyway, going back to this, we came in here and I said the bad news is already out. I'm sorry, all the good news is out. This was just an artificial rally, a buy the rally news. They sold the rumor, bought the news. The market had rallied, and so the puts had gone down. And I came in here and I said, let's buy these. Okay, we're right here just after 3 o'clock. I think the market's going to sell off into the end of the day. Sure enough, it did. The next day, it gapped a lot lower, so the put options gapped a lot higher. So we made 360% on Wednesday. On Friday, we bought these things, and on Monday morning, we sold them again right before the opening. I said, let's sell them right on the opening. Now, the opening was down here somewhere, so if you didn't make 240%, you made 210%, but you still made a lot of money. You tripled your money. And again, this was over 3 days because there was a weekend here. But on trading hours, it was literally an hour and a half. Okay. I mean, now I wish I could say we make this kind of money all the time. Rodrigo alluded to a trade that we did a couple of about this time last year. It was actually last year in March. What we did is we talked about Viacom. And we held those for a couple of days, but again, sometimes we hold these things for several days, these options, but we trade around them so we can make money. But Viacom had become ridiculously overbought.
Really quick, Matt. Really
yeah.
quick. And where was this? This trade was from the Tier 2 newsletter, or
which one? The Viacom?
Yeah,
Viacom. We talked about this on the Tier 3 in the Tier 3 chat room.
In the Tier 3, the call.
Tier 3 call. I'm sorry, not the chat room.
Newsletter. Okay.
And the Tier 3 newsletter, the call I do 3 times a week. Monday, Wednesday, Friday. Did one today about one at noontime. But look at this. I'm just going to go 2020. I'm going to go back. This is a Bloomberg chart. Now this is Viacom stock, and now let's go look at the weekly chart. And what we're looking at, and again, I look at technical analysis here. And this is a thing that tells you whether a stock, whoops, is that the weekly? Yeah, let's go back even further. 201. Okay. But look how this, I'm going to get rid of these other lines so it doesn't look all so confusing here. But here, see this? Look, this is an RSI, relative strength index. When it gets up to the 70 level, it tends to tell you the stock is getting overbought. When it gets down to the 30 level, it means it's oversold. Well, see how many times when the weekly got up here, got just above that, you know, and it's a red line for that reason, because that's stop buying, okay? The green line is green for reasons. Go ahead, start buying, okay? But see how many times, every time it got here in 2014, 2015, 2017, it got very overbought and it sold off. Well, look at this one. It's ridiculous. It was one of those meme stocks, okay? AMC, GameStop, they took off. This one had a big short position, and so it skyrocketed. And it got to the point, its RSI, when it got above 70, that's usually a problem. It got to 93. It was ridiculous. I said, okay, this is ridiculous. We got to buy the put options, okay? Sure enough, I bought those. The stock, the options went up 2,500% in a day. Okay? Not 25%, 2,500%, 2,500%. Many people held on to it and made 5,000% later that day or the next day, the day after that. So one person's even claimed that they and I can't prove it one way or the other, but technically those options went up over 10,000%. Somebody claimed that they, and maybe they did. I'm not trying to question their integrity. I'm just saying they said that they made over 10,000%. I readily admit when it got up 2,500%, I said take profits. Some people held and told me later that they actually held on and made over 5,000%. But then again, these are not the kind of calls we get all the time. I shouldn't say kind of plays, I should say calls, because the call option, in this case, it was a put option. But these are the types of things that we see when the market is dead wrong. Viacom, I said, Viacom, are they going to cure cancer? Are they going to come up with a vaccine? Are they going to come up with a new iPhone, something to replace iPhone? No, they're a great company, and we like the stock, and we like it in our tier 1 account. We love this thing. It's a great company, and I'm going to double down on this pretty soon because it's a great long-term call, a great long-term play, great long-term stock. But this was ridiculous. And again, these are the types of things that we look at. Now, let's look at today. Oops. Okay. What we did today. The whole idea is we're trying to help people not just weather the storm of the stock market, but to profit from it, okay? And it says, if you can make profits in these other things, you'll be, okay, so here's somebody from Bloomberg wants to ask me a question. So as you can see, I won't respond to that. So I apologize, but I apologize. Okay, I'll look at that later. Anyway, GIP. Okay, now, this is what happened today. Whoops. No wonder it's not. I put S&P. The SPX is the symbol for a stock. I didn't hit the index button. Okay. Oops. Index GIP. Okay. Now, this is what we talked about earlier today. The market was getting oversold, and we actually. I want to make sure that we tell you this correctly, because remember there was one time we did buy some stock down here. It looked like it was going to go higher. When it came back down, we got out. We didn't lose a little bit of money, not much, got out. And we tried it another time here, and again, got out. Then here, nibbled a little bit, and it rallied up, and we held off. It came back down, and then when it broke back over this higher high, technical analysis, okay, higher highs and higher lows. And now, again, usually we look at it on a longer-term basis. We were looking at this one on a daily chart, but I said, it breaks above this line, we're going to add to it. And we added to those calls. And it came up here. But everything changed then. We saw Bitcoin starting to trade higher. And that's one of those key liquidity plays. We know that the Fed is still doing QE. And I thought to myself, boy, if there's any time they'll do a little bit more of it, they'll do it now, because they have their because they have their meetings coming up in 2 days. It's going to happen on Wednesday. Well, it starts tomorrow, but they're going to have their their report and their press conference coming Wednesday. Do they really want the stock market to be crashing during that? So I thought that maybe they'd add some liquidity this afternoon. And this was what we've got it. Okay. So
Hey, Matt, really quick, you're not sure if you just want to leave some time, just to make sure you leave some time there for tickers at the end if you want.
Yes, let's do that. We'll do after I just talk about this. Yes, yeah. I mean, again, we'll leave 15 solid minutes and we got left here. But see this, so we made the higher high. And then my thinking was, okay, Mr. Market's going to do what Mr. Market usually does and shakes the people out. Because they, we hope. And then we want to scare people out. And sure enough, it came back in here. We didn't buy more here. I would have loved to say claim that we did. But when it broke above this level, again, another higher low, only slightly higher, but doesn't matter, higher low, and then a higher high, and it just took off. And I was telling people in here on the chat room, I'm like going, listen, I compared it to, who thought the Chiefs could probably come back and tie the football game last night when they were losing with 13 seconds left. And I said, well, it's not out of the question we could have an up day in the stock market. And people were laughing and joking about it, but sure enough, we did. And the Russell 2000 actually ended with a really nice gain on the day. So these are the things that we talk about. And I've talked about a number of different names: Microsoft, Apple, NVIDIA, et cetera, Tesla. But I want to hear what anything you'd want to talk about, the stocks or ETFs that you're interested in, so we can hopefully give you some leadership about, or some headway what's going to happen next.
All right, and I want to give a shout out here to J-Rock, MRAZ, and SFGC7. Thanks for joining here, Stock Picks, the Stock Picks family, guys. Shout out to the folks. Welcome to the family. All right, throw those tickers down. You know the rules. No spamming. One ticker per person. We'll take it easy. All right. Okay, Mary is asking about a firm. A couple of people asking about a firm.
We get this every time, don't we, bud? It's funny. It's a great.
Have you seen the fundamentals and all that of the company? Have you done your research and stuff on it?
Yeah, it's we do not cover the stock, so I can't. And it's good. And it's of course it's just went public, so I don't have as much on this one on the fundamental basis. I do have on other ones, but look at this right here. One of the things that again, it saw a big bounce today. You can see this is the candlestick. Look how oversold it was. Now it's only been trading for a short time, less than a year, or about just over a year, I guess. But this is very, very oversold when you get down that deep. I'm gonna get rid of these lines because these are the moving averages. They don't mean a whole lot when the stock's only been trading for a short period of time. But look at this too. Look how it's got ridiculously oversold just as it was testing its lows. It didn't make that key lower low below its May lows. That's very bullish near term. Now, there's another thing we look at. This is, again, that RSI chart I said is very, very oversold. I also look, I'm going to get rid of that line. Also look on a technical basis. Okay. Oops. That's not what I wanted to do. I want to go here, add steady. Bollinger Bands. So what's called the Bollinger Bands that we look at. Look how it got right down to that bottom line of that. Okay, now what the heck is a Bollinger Band? What it is, basically, is that instead of looking at the 200-day moving average, which is something a lot of people look at, we look at this on a very short-term basis. You look at the 20-day moving average. This yellowish green line is a line that shows 2 standard deviations below its 20-day moving average. The purple line is 2 standard deviations above. See, when it got above that level, that was a good sell signal for the stock. Okay, this one is a good buy signal this morning when it got down at the bottom, but it should still be a good buy signal with the stock being as oversold as it is. Now look at another thing that I look at. It's called a MACD chart. And whoops. Now this thing, see how many times, you see, what this is, I'm sorry, what it is when the 9-day, we think about, you hear about the golden crosses when a 50-day moving average crosses above a 200-day moving average. Well, the MACD chart measures the 9-day exponential moving average versus the 12-day average. And when it breaks, we always need to see a confirmed break. See this thing here? That broke to the upside, but only by a small amount, and then it rolled back over. That was a head fake, so we didn't buy there. But look what happened here. That was confirmed. It made a nice little gap there. That was a place to buy it. Look what it did here. That was a great place to buy it. Look what it did back here. Okay, same thing. Very nice rally. That may not seem like much compared to this rally, but on a percentage basis, oops. On a percentage basis, I mean, you know, it went from, well, let's see here, went from $46. I mean, you know, there's an 80% rally. I mean, it's just unbelievable what these stocks can do, what these indicators can do. Okay, I'll get rid of that. But again, we're not there yet. So the next thing I'm going to be doing is say, okay, if you buy the stock here, it's been a nice purchase. Okay, what do I want to buy more? Well, let's wait and see if we get a confirmed MACD cross. Okay, if we get that to the upside, that's going to, and that'll take it above its trend line, the trend channel it's been in, which has been a horrible one for 2 months now. And when stocks get this washed out, remember I went back to that RSI chart, relative strength index chart. It's very, very oversold. Oversold stocks see very, very big bounces. Now, they see the biggest bounces. Now, the other thing I want to say here too, let's say you bought the stock today at $55 in the middle, you know, nobody gets the exact bottom, was down at 51. Let's say you bought it at 55. And then it gets up above 60 and it gets a MACD cross and you buy more. And you think, well, geez, I wish I had bought more when it was at 55, but who knows when a stock's falling out of bed like that, who the heck knows what the right price is? You nibble a little bit, you nibble a little bit, and then don't be afraid to add to stock on the way up. All right? Because if you buy it at 55 and then add it to at 60, especially if it's equal amounts, now you own it, now your price is 57.50 and the stock's trading at 60. You have a winner. Then now you use a stop loss order or stop order because it wouldn't be a loss at 57.50. Guarantees that you won't lose money. Now, there's no guarantees in life. So, I mean, it could gap lower for whatever reasons at some point, but you have a winning thing and that goes a little bit higher. You buy a little bit more. Suddenly you own the stock and it's like, oh, I bought it 3 or 4 times. I wish I had bought it all at that 55 level. But who knows when a stock's falling out of bed what the right level is? You buy it at 55, could have gone to 40. This way, you're buying it on the way back up. It gives you that confidence to really go ahead and get more aggressive. Suddenly you bought it 3 or 4 times. Now your average price is $65, but the stock's trading at 100. You've got a huge, so yeah, my average price is 65 instead of 55, but I own a lot more stock. I never would have bet that much for stock because I wouldn't have the confidence to. So I own more stock. I'm actually going to make more money. And not only that, now I'm going to raise my stop order to my stop loss order or stop level to $90. Okay, so now I'm guaranteeing myself a profit. The people who buy that stuff on the way down, there's nothing wrong with buying stock. You like a stock, it trades at $50 and you buy it at $49.50 and a little bit of $49, that's fine. But if this stock goes from $49, from $50 and goes to 45 and you add more, now you've got, great, you've got an average price of 45.70. So you've lowered your average price. The stock is trading at 45. Now you're relying on hope. If you buy a stock, it goes down 10%, get out. Just get out. I don't care how much you like it. Get out. Limit your losses. I usually leave it to about 8%. Get out of the stock. It doesn't mean it's a bad company. Doesn't mean it's a bad trade. It just means the timing's bad. Wait for a better entry point. Limit your losses. And like I said on the one where it keeps going, just let it run. Let it run and raise your stop, your loss, your stop level, and you guarantee. So when you let you want to be batting way above 500. But when you're batting 500 and you're limiting your losses to very small and you're letting your things run, well, of course, you're not coming out 500. Okay, you are killing it. And that's the whole idea. Limit your losses, risk management. That's another thing we really try to do on this in all the market letters in the chat room.
All right, great stuff there. I hope that answers your question, Mary. Then we have, Mary says, thank you, Matt.
Welcome.
Then we have Anthi, I don't know what the name is, TTD, Trade Desk.
TTD, whoops.
Yeah, the Trade Desk.
Yeah,
TTD.
Yeah, just hold on. So let me just, there you go. TTD. Okay. Sorry about that. Now look at this one. Just missed an outside up day. But I just want to see what some of its other stocks. Let's see here. Yes. No, it's all right. The comps. There we go. See how the rest of the stocks did today. Yeah. Okay, well, that's kind of funny, but anyway, I'm gonna go back to the chart here. These guys have, they've had this horrible run. The stock got oversold. Okay, I'm gonna get rid of some of these moving averages because you don't really care about them, and they're not that compelling in this stock. But look at again, lower high, lower low, lower high, lower low, lower high, lower low, lower high, another lower low. This one though, look how oversold it became. More oversold than it got here just before a nice rally. More oversold than it got here just before a huge rally. So this is looking good. Now, okay, well, geez, it had this huge bounce today. I missed the bottom. So what? Doesn't mean it can't go higher. Shoot, what is wrong with this thing? I apologize here. Let's see if I can. Oh, my system's kind of frozen up here a little bit. Hold on. There we go. Okay, TDD. And again, remember that MACD cross that I talked about? Let's look at that one. Yeah, it hasn't gotten there yet either, but that's okay. But look at this head fake it got there. And look what happened when we got a positive MACD cross. Straight up, positive MACD cross. Very nice rally there, okay? Positive MACD cross, positive rally. So what we want to do is buy. Well, this just missed what we call an outside day. And what that is that a stock trades below its previous day's low, above its previous day's high, and closes above its previous day high. And that's a complete sign of exhaustion. The people just said, get me out at any price, and nobody left to sell it anymore, and it shot back up. It came very close, so that's encouraging. It would have been even better if it was that. But like I said, oh yeah, let me just go back to, remember we talked about the Bollinger Bands chart. Let's see how oversold it got to that. Again, the Bollinger Bands are versus, standard deviation of above or below. It's a 20-day moving average. And look, it got below that line today. So that's a great buy. It should be going higher, okay? It got slightly below it here. See how it got up below there and the next day? And then again, this doesn't look like a huge rally, but it's still, you're going from 46, okay, to 62. A nice 50% rally in just a month. Okay, so this stock is getting shaped up. I'm very nervous about the stock market longer term, so this will be more of a short-term play, but I think this thing has got more upside to go on a very short-term basis. And then you want to take your profits, move on, and look for, again, another entry point when you see that thing get very, very oversold.
Okay. All right. One last one. We're going to squeeze one out here. AMD from Steve in the chat.
Okay. AMD. Okay. The first thing I'm going to look at on this. Okay. Something else. Whoops. Gosh darn it. There we go. TWSE PLAS. What the heck is that? This is the Taiwan Plastics Index. Excuse me, let me just take a drink here. Why in the world would anybody care about the Taiwan Plastics Index? Well, you know something? Plastics go into those little chips. Look at this. All these chip stocks, including Advanced Micro Devices, are getting clobbered lately. But look at plastics. Okay, it's come down a little bit, but it's still a couple of percent above its December lows. And it's telling me that it's stable. The demand is stable for plastics. It's a decent, not a perfect indicator. Other ones, but so let's look at AMD then. Oops. Excuse me. Okay, AMD equity RSI. Okay, now, great company, great CEO. Now this goes back to this, this thing we're talking about with technical analysis. I know I'm running out of time here, but I do want to say that we want to talk about with the technical analysis. Remember, technical analysis is not just a bunch of lines drawn on a page. Okay, it is fundamentally bound. You think about it. When a company has a problem and they've gone through 2 years of just horrible results, they've had to lay off people, they've had to close their factories, then things finally turn up. So what happens? Okay, The people at the mutual funds and the hedge funds, they've got an army of analysts, and they come into their portfolio managers and say, hey, I've been talking about their suppliers. I've been talking to their customers. They've got a new product. This company's going to take off. But you know something, it's not going to show up in the earnings for another 6, 9, 12 months, but buy the stock now because it's going up. So the really smart money with all those, the army of people to help them out, they're going to buy the stock now. Okay. Well, how the heck can everybody else find that stock? Well, what's going to happen is of course, it takes time to hire people. It takes time to retool your factories or to build a new one. So it's going to take time, 6 to 9 months, for those earnings to turn up. However, since these big hedge funds and mutual funds have the analysis to find out that this is going to happen earlier, the stock starts moving up, and you can see that in the charts. That's why we look at charts, because people, and again, this is not inside information. These people are doing, they're just doing hard work, doing good work. They figure out this stuff. We don't have those people to rely on, so we look at the charts to help us out with that. Now, going back to AMD, I'm sorry, I kind of on two things, but look at how now the stock did break below that 200-day moving average, but it didn't really break hard below it. And look how it's been going on for years. Got down to it, held it there, held it there, held it there, held it there, came down, tried to break it, but as bad as it was, it couldn't break it. And look at that great shot. Now it's back down to that level. It bounced off that level pretty strongly today. Okay. Now again, it's one that saw a big bounce, but look at its RSI is getting oversold, relative strength index getting oversold. And let's look at its Bollinger Bands chart. And again, there's a lot of different things we look at. There's all sorts of patterns we look at, head and shoulders patterns and such. There's triangle patterns and wedge patterns, but these are just kind of things to look at on a regular basis. And again, let's get rid of those moving averages so no one can get in your way. Look how far it got below its Bollinger Bands chart today. So this bounce should last. And this is a great company. Will it see more weakness at some point? If the overall market does, yes, it will. But this is a stock that I think you're going to be able to make money on. And you even look at the call options, especially tomorrow when the VIX comes down and those call options get a little bit less expensive. Because when this stock bounces, it's going to bounce nicely. And if you're looking at the call options going out maybe 2 weeks, and a little bit out of the money, you're going to do very, very well, I think, in this thing.
All right, great answer there, Matt. So I know it's already 6 p.m. here. I know you're a busy guy. So any closing remarks here that you have for the folks on why they should join the newsletters, the chat room, and what to look forward to this coming week, and everything else coming with that?
Yeah, I think that's, well, the one thing is just that, just what I was talking about, it's been so hard. People they want to help you weather the market, and that's fine. But what they want to do is basically, weathering a tough patch in the marketplace is one thing. And believe me, in my picks, especially my longer two picks, I've bought stocks with pay high dividends because they help you wait. They're not just paying high dividends, ones who also increase their dividends every year, so they're good, reliable dividends, but they'll pay us to wait through these volatile times. Also, they won't go down as much because people, Procter and Gamble. I mean, people still need laundry detergent. Food, Archer Daniels Midland, food company. I mean, people still need to eat. Okay, so these are the stocks that we've gotten into, but I want to help you do more than just weather the storm. That's why we look in the tier 3 and tier 4. We look at options and inverse ETFs and leveraged ETFs. Those leveraged ETFs we only use for a very short trading time, 1 week at the most, maybe 2 at the very most. Those are trading vehicles because they go down if the market's flat. But you can still use inverse ETFs, the ones that are not leveraged, that are 2 times or 3 times leveraged. Sometimes that are just 1 times leveraged, just 1 time inverse. They're fine. But we look at those and can help us not only weather the storm, but profit from the storm. Because the key thing when this thing is over, when this thing finally bottoms, people are going to be forced to sell. People are going to be panicking. But if you're somebody who's actually made some money along the way, you've raised a little cash, but made some money along the way, you're going to have so much more confidence to buy once you really realize that the market has bottomed. Okay, you see the market down flat on its back. It's like, I've lost so much money. I want to put more in there. Well, so say, no, I haven't lost any money, or I've lost very little money. I've got some cash on the sidelines. This is a steal. I got, look at the, NVIDIA and Microsoft, they're down 30% or whatever. I'm making up numbers here, but it's like, I have the confidence now. And not only that, maybe I'll buy a little bit here. But what happens when you have a bad, a bad market like we've had recently, when a stock bounces 5%, they're out immediately. You'll be the one who's in it for the long term and be able to make money. So that's what we're really trying to accomplish here with these tier 1 and tier 2 things, newsletters. And on the tier 3 and tier 4, where we're making the little short-term, more aggressive calls to really kind of maximize your returns, whether it be down markets or up markets. And that's what we're trying to accomplish. So, and the last thing we talk about with the market this week, we saw this huge bounce today off the lows. I think we'll see some follow through tomorrow, but at some point I do think we'll see lower lows because it takes a long time to get rid of that, to wring out all that excess leverage that built up over many years, really been building up for 12 years and really a lot in the last 2 years. That'll take some time. And so the markets are going to remain volatile. And that's where, somebody with the trading experience I have, not just the theoretical stuff, but know what really happens in the market and what's going to happen next, I think will be very helpful to you. And I hope you'll join us. I think the people who are already on board really enjoy it and have found it very helpful, not just for making picks and help them make money and weather the storm and more than just weather the storm, but also to learn about how the market really works. And so they can do this stuff on their own as well.
Absolutely agree. Retail here appreciates everything you do for them and for, all the folks here that are trading as well from all over the world. So Matt, thanks for being here. Appreciate your time. We'll see you here very soon. So I'm just going to go ahead and take the screen. I'll show them. I'll just go over the subscription and stuff, Matt, but really
Thanks.
appreciate you, man. Thank you.
Have a great one.
You too, sir. Okay, guys, there you go. Matt Maley. I'm going to drop the link there in the chat. If you do want to join, I'm going to go over this with you. And there you go. That is one of the most recent picks that he had, January 18th. All right. Trading the FAS, posting at $16.17. Price target was to sell at $20 in 1 or 2 months. This thing went to like 21 or somewhere like around there. So he already put out a sell alert for this trade. So if you're asking yourself how long imagine the people that played the options on these. Yeah. So that is the link that I'm posting in the chat, guys. That is where you can access Matt's newsletter trades. So I'm going to drop that link here one time in the chat. If you have questions, ask them. I know Junior had a question. Guys, this is the time. Okay. I'm here with like 100 or 200 of you guys. Let's knock these questions out right now. It's just going to save everybody time, So put up the questions you have in regards to the Matt Maley trade ideas or the chat room, whatever it is. Let me know. This is the time to ask the question, folks, about Matt services here. I'm just going to go over this quickly, and then I'm going to leave the stream running here for a bit, guys. Post the link for the newsletter. All right, let me put it again there in the Zoom chat. Guys, don't be shy, engage. Like, come on, participate. This is a two-way street. It's not just me talking here. I need to, if you have questions, let me know. It's definitely the best time because I do get swamped with like 100 emails after these things. So if we can knock the questions out right now, that's going to be better because somebody else might have the same question. You never know. And as far as what Matt does, the newsletters are just for stocks and the chat room is where you have the options kind of stuff. When are the live calls? The live calls for the tier 3, Robert, live calls for where? So in the tier 3, there are some live calls, but in the chat room, there's also a live call on Tuesdays. So let me know which one you're talking about, Robert. Is there an option to just subscribe? But you have to go through the checkouts. That's the only way to do it, just because we're never going to offer these monthly prices again. This is something that we've only done this for like a couple of days and we're not going to do it again. So like, if you do want to take advantage of Matt Maley's monthly, all right, it's the same as the yearly, but it's cheaper because it's monthly. So if you do want to get the monthly, this is the only time we're going to be offering it, guys. You also have a 14-day money back guarantee, 14 days money back guarantee on the newsletters, 7 days on the chat room. So the starter is, all right, let me break it down for everybody. So let's just focus on this. The stock pick starter is the first one that you see there on the link. That is the $7 a month. Yes, you heard me right. $7 a month, cheaper than your burger at McDonald's. Okay. Like this is something that will actually make you money. It's way cheaper than Netflix, and it definitely will make you way more productive than just sitting on your, just like watching Netflix. So this is probably where you need to go, right? Try it out. So the first link, um, okay, Hassan, I see your question. All right. So the first link that I posted right now, guys, this is the $7 a month stock pick starter from Matt Maley. It's one trade idea every 2 weeks. Every 2 weeks. Once you complete that checkout, it's going to automatically refresh into the stock picks enhanced. If you do want to add that, that is about $14 a month. Okay. And that comes with one trade idea per week. Keep in mind, all these things do come with um, they come with like commentary. So Matt is going to be posting comments about the markets and about different things there. So you do get that as well, right? So this trade is from the enhanced right here. Let's take a quick look again in case somebody has short memory here. Ticker FAZ, price as of posting $16.17. All right. This is not made up. You can see this was posted on January 18th. All right. You were talking, somebody was asking about exits, if there's like an exit strategy or something like that. There you go. Planning to sell at $20 in 1 to 2 months. But guess what? This thing, like we already sold it because it already went above our target. So Matt Maley sent out an alert to take profits on this specific trade because we're already up. It hit our target, and that's it. And keep in mind, this is basically shorting banks, right? So with Matt, you'll be able to take advantage of the markets no matter where it's going, right? Everybody's complaining that, oh, I'm losing money, but that means you're probably only on the long side. I know a lot of people that are shorting that are just saying the total opposite. I'm making so much money. So you do have to learn both ways. That is just the law of the markets. Otherwise, you're just going to be sitting out for 3-4 months whenever we have these corrections instead of making money on the way down, right? And also adding to nice positions. That is why you have Matt Maley's newsletter, because he will be able to break down all this for you, give you the stocks you need to look at, all that stuff. If we want to upgrade later, will there be an option to do so at today's price? No, sorry. Unfortunately not. It will have to be yearly, but you can just send me an email and we can talk. Maybe we can work something out. I'm reasonable. All right, Pepper. Option thoughts on BBIG? I don't know. It's probably going higher. I do like it. We actually broke news for BBIG a while ago, Benzinga. So is the subscription provide only newsletters? Okay, Hassan, I see your question on the YouTube. Hassan, does this subscription provide only newsletters daily or access to chat room also? The link that I'm putting, the only link that has been pasted in the YouTube chat is for the newsletters. If anybody does want to join the chat room or hear about it, you have to send me an email. So I already put my email and contact there in the chat, folks, if you do want to look at the chat room, okay? You know what? I'll just post the link there in case any of you guys want to join. Because I know that some of you guys are a little bit more advanced and you don't need that much, you just want to be with somebody who's more advanced. Okay, let's go back here to the questions on the Zoom call. How does Matt pick the option strike price and expiration for the QQQ calls and puts? Opera, I don't know his exact method, but he's been doing this for 40 years. He's a chief market strategist at the private equity firm Miller Tabak, director of trading at Merrill Lynch, as well in Salomon Brothers back in the 70s and 80s. So this is somebody who's been doing this for his entire life, his career. He's a career man, It's not somebody that taught himself. It's somebody that actually went through high level institutional positions in Wall Street. And he was able to learn the beast from the inside. And he has a trading background. He doesn't have an analyst background. He has a trading background. So he's got the brains and he's a good trader. You don't get those two together often in Wall Street. So you can see that he's very passionate about teaching and when he talks about stuff, and he just loves this kind of stuff. It really does. He's passionate about it. So what do you get? Okay, Robert. So both. All right, let me get to your question, Robert, because I know you asked. The tier 3 is a call Monday, Wednesday, Friday. Okay, it's a full market update. You get stock, you get trade ideas, you get market updates, sector updates. a full analysis. Like you are having a 30-minute conversation with a chief market strategist. Trust me, this is not your average call. All right. So as anybody in retail who even has the opportunity to talk to a chief market strategist, let alone have a call Monday, Wednesday, Friday, you're getting spoiled. So yeah, you're getting that with the tier 3 in the chat room. You talk to him every day nonstop. Like he's actively trading. So the call on the chat room is on Tuesday, Robert. Okay. And that's interactive because it's on a Zoom call. So yeah, folks, I mean, just realize you have somebody like you have a really smart fellow here with Matt Maley, somebody who's really good, really accurate, more importantly, great P&L. So if you are learning or if you do want to learn to trade stocks and options, Matt Maley is your guy. All right. All the newsletters are just for stocks. The only place where you're going to get, what's up, Stan? The only place where you're going to get the option stuff is in the chat room, just because I don't want you guys to sign up and then be disappointed and then call back and be like, yo, I thought it was this way. So just want to put that up front, guys, so everybody's on the same page. Let's see. Are you expecting the VIX to go down? I'm not sure. That's a good question for Matt. I think he said he expects it. He does expect it to go down. Pepper me asking, asking, what do you get again for tier 2? So for tier 2, you get one trade idea every week. Tier 1 is one trade idea every 2 weeks. Tier 2 is one trade idea per week. Tier 3, you get like 3 to 5 plus per week, plus market updates, plus sector updates, what's going on in the markets. I mean, look at what's been happening all these days. The market is just tanking and tanking and tanking. Like you really want to talk with a chief market strategist at these points, but I understand not everybody has access to a chief market strategist. But we at Benzinga made it possible. We got this thing approved with the board of directors at the equity firm. So this is something that was not easy to put together. But yes, you know, Matt Maley, you see him on Bloomberg, CNBC, Yahoo, you see this guy all over the world. So people know him. The fact that you can actually have a call with him, like that's pretty dope, honestly. Like that's great. So I would suggest anybody that, you know, wants to try it out to try it out. Newsletters, 14-day money back guarantee, chat room 7, guys. All right. All right. So that answers your question, Robert. Somebody, MSR, doesn't he update us in the newsletters of target exit? Yeah, you see, are you looking at the screen where it says planning to sell at? That's your target. If we want to upgrade later, yeah, okay, went over that already. What link are you on? ETC, I'm on the Stock Picks Enhanced. I'm going to show you what the Stock Picks, the tier 3 looks like, where the call is recorded. And it's like Monday, Wednesday, Friday. Robert, you might want to pay attention here because I know you asked something about this. Does it include selling puts? Phyllis, it just depends what the market is, what the market warrants, pretty much. Okay, so this is January 19th. So this is one of the calls that we had, but we have them Monday, Wednesday, Friday. I know that the other ones are uploaded there as well. They should be as soon as the call comes out. So if for any reason you don't see it, please call us and let us know, because sometimes there are glitches and we want to make sure they're taken care of. So let me just click and play so we can get a little taste of this.
Markets had a interesting day, needless to say.
Can y'all hear that? Let me know in the chat.
Nice big rally in the morning, and then nice big rally in the morning. Sold all the way off, moved into the negative territory, and now it's trying to bounce back. And we have moved back up into positive territory for the S&P and the Nasdaq. Okay.
All right, so there you go. 20 minutes of Matt Maley. That's Monday, Wednesday, Friday. You know he talks pretty fast. So 20 minutes with Matt is like an hour and 30 minutes with anybody else. So you know that the information is packed. All right. What are my thoughts on Peloton? I love it. I like Peloton. I'll probably get one. They're cool. As far as the stock price, I don't know. A lot of bad news. Let's see, Robert, when is it and how do you access it? How do you access the call? All right, so this call that I'm showing you guys is the tier 3. This is the one that's like, I think 47 a month. Did you guys get this? And you just go to the top and you see where it says, let me zoom in there. Stock picks. All right, you put your mouse there. It's going to show you all the subscriptions. You have the starter. This is great to explain this. All right. So this is the starter. This is the one that's $7 a month. Okay. It's one pick every 2 weeks. Then you have the enhanced right there below it. That is one trade idea per week from Matt as well. You have the strategy elite, which is the call Monday, Wednesday, Friday with 3 to 5 picks, sector updates, market updates, anything that's happening in the market. Like a chief market strategist will break it down for you into tradable, actionable trade ideas. And so this is where we are now. That's the call. So
the 3-7. Whoops. I think that
and sometimes he does give, a call or a put here and there. But some of you folks are asking about the chat room. I'm just going to show this really quick to get this out of the way. So you have a general chat room where all the folks are talking there. Matt is pitching in, like he's talking there with you folks all the time. And then there's a separate chat room where only Matt can post. This is why we wanted to do it this way, so that it can be organized and you can have an actual conversation with the members and with Matt Maley, but you can also have separately Matt Maley's trades, and they don't get lost in the chit chat, in the oh, look at this, or oh, look at that, or hey Matt, what do you think? It doesn't get lost in the conversation. That way you get all of his trade ideas and setups right there, baby. All right, you don't have to go anywhere else. So really quick, they're on the chat room, but the newsletters here, guys, this is great even if you have a full-time job or not. If you have a full-time job, literally you just get the trade to your email, to your phone, get into your Robinhood or whatever you're using, and you make the trade really simple. You just go to the bathroom 5 minutes, boom, clock of the trade, you're good to go. The session, it's like 20 minutes. So if you get the tier 3, take your lunch, use a break, listen to that call, because it's very, very important. If you want to talk to a sales associate in a private equity firm, they're just going to charge you 10 grand and take your money. That's the truth. That's how that works. You are talking to the head honcho, the guy who's above everyone else there, the chief market strategist. So he's giving you a private call Monday, Wednesday, Friday. Take advantage of it, guys. Know what you have, know what you're doing, and who you're doing it with. L3, tier 3 is 47 a month. So yeah, I mean, compare that to just paying a sales associate at an equity firm $10,000 for 10 minutes and just charging you 10% fees every year. So no, Matt Maley's trying to teach you how to do it, right? He wants you guys to do it yourself. Is tier 3 options or stock? Good question. It's stocks, to be honest, but here and there, Matt might sneak a call or put, who knows? But mostly stock. It's like 90% stock, I'd say. Junior, it won't refresh on you. It's weird. Send me an email, Junior. We'll see what we can do. Try refreshing the page. What are your thoughts on Palantir? On Peloton? Okay. All right, Cash. How do you access the Monday, Wednesday, Friday calls? Robert, they're in the portal that I'm in right now. I think you already saw that. Let me know if you still have that question. Basically, you just go to the Premium Ideas portal. It's this beautiful site you're looking at. You have all the newsletters above, but you need to look at the stock picks on the far left. That's where you have all Matt Maley stuff, okay? Is it always at 5:30 a.m. Eastern? Is what always at 5:30 a.m. Eastern? I don't think nothing is at 5:30 a.m. Eastern with Matt. Like he's in the chat room 9 to 5. I don't know if that's what you're talking about. Let me know in the chat. If I already started, can I upgrade to other options? No, we can't just switch around people, Viva. We can't just be switching around people at will, pretty much. But we do have a 14-day money back guarantee. So tier 3 is the highest. No, after the tier 3 is the chat room. That's the tier 4. That's for more active traders. And we're talking about options. And look, if you have a question about something unrelated to options, you can ask. You can be like, hey, Matt, I want to buy a good long-term value play that has great financials, good free cash flow, low PE, the sales ratio, whatever. You can ask him any question that you want. He will give you that answer. I don't know who else you might want to ask that to. I don't know who else you would want to ask that kind of question to. Matt Maley is your guy for anything, options, stocks, and he's getting into crypto. He's dibbling on crypto. So, all right, let's go to the questions here. Are the tier 3 Damn, Robert, you're fired up, man. Questions, good stuff. Thanks for doing the questions right now, guys. Instead of doing the whole email stuff, it's just much better. You know, it's much better. We all save time. We have fun here too. All right, Robert is asking, are the tier 3 calls live or recorded? They're live. So if you do want to attend, all you got to do is dial from your phone number. Blip blip. It's going to give you all the instructions, and then you have to just put it on speaker, and then it's going to, you know, the call is going to run. It starts at noon Monday, Wednesday, Friday, and you access it from your phone. Just want to be clear. Even though it's on Zoom, you access it from your phone. Solana, thanks, Robert. Robert's asking the questions all you guys have. Thanks for participating, Robert. You won a prize, okay? I will hook you up, dude. Email me. All right. Mine Money on the YouTube chat. Hey, Rodrigo, Matt coming to this live today. Bro, you're late. You are late. You're like an hour? No, that's 30 minutes. You're like 30 minutes late, but you can rewind it on the YouTube thing and you can watch it again. He's tight on schedule. I don't know. He's probably got some other interview somewhere. I don't know. Let's go through these questions. All right. Are the tier 3? Okay, Robert. So yeah, the tier 3 calls are live. You can access them from your phone. If you, for any reason, cannot do that, if you cannot access it because you are either at work or you're busy or whatever the reason is, you just go to the far left here, Premium Idea site, right? This is the main site, the portal. Click on, right? You hover your mouse over stock picks here. Okay. You hover your mouse over stock picks, and then you just click Strategy Elite. That's the tier 3. Okay. Starter, tier 1, Enhanced, tier 2, Strategy Elite, tier 3, Chat Room, tier 4. So you click on the Strategy Elite, which is the tier 3, and you're going to see all of the calls. Let me just go back here a week or two. All of the calls are recorded there. All right. Everything that Matt Maley is saying on his calls, they're all there in case you missed them. So they're live and they're also uploaded in case you can't attend them live. Okay. What is the number to call? Well, once you join, you'll get all the info, Robert. Does the chat room also send alerts when Matt puts in a trade? No, Andrea. Otherwise, you'd get a bunch of alerts all the time because Matt is always answering questions. And also he's posting trades in the chat room. But that's why his chat room is separate. And that's why in his chat room, only he can post so that there's no confusion and you don't have to, you know, scroll through all that stuff to find Matt's trade ideas, which is ultimately what you care about. So that's why we have a separate chat room. Let me just show it quick to you here. Okay. Okay. All right. So this is Matt Maley's private chat room where only he is able to post. And he is the only one that's posting trade ideas, setups, all that stuff, entries. Look what he's saying. I'm going to take some profits on the January 26th QQQ 346 calls before the close. I'm not surprised. Every time I get into the damn chat room, he's always saying he's taking profits out of this or that. So yeah, like you will see this going on a lot. He's always going in and out of trades. It's active. It's active. He's always in and out. Literally, he's always in the chat room talking to you guys, giving you trade ideas, exits, entries, all that stuff. And then you have a public one. I mean, it's not public, but we just call it, I mean, just ignore the name. But basically, it's the chat room from Matt with the members where you guys are posting your trade ideas, your questions, right? On like what you need help with. For example, some people are asking Matt, what's a good long-term value investing play? Other people ask Matt, like Matt, what are some good calls and puts to buy today, this week, next week, whatever. But it's ongoing. It's ongoing. I can tell you they do trade the Qs a lot. They do trade SPY, Qs, that kind of stuff. And Matt doing this for 40 years, man, I tell you, I wouldn't want to do it with anybody else. It's like when you go to the, like, if you ever get like a, like, you know, God forbid something happens to you, right? You want your doctor to be like somebody who's been doing that for 40 years, not some fresh college grad, you know, that's just trying to learn on the job. You want somebody who's done it, who's been doing it, who's successful at it, who's got a track record, not somebody who's just, you know, new, nothing bad, but just come on. Like when you're talking about your money and all that stuff, it is a delicate subject. So I really suggest to go that route, meaning with somebody that has more experience. I think that's common sense for everybody here. Philly asking when he goes live. When he go live, he goes live on the chat room on Tuesdays, like at noon. Okay. But the chat room is, I think it's like 1,300 a year. You get a laptop, but that's if you're a little bit more advanced, guys. If you guys really want more active trading, the newsletters serve a great purpose for those guys that maybe have a full-time job, or maybe, like you don't have enough time to be doing your own research. Matt Maley's doing it for you. And also, even if you're a full-time trader, you can do your research and just get those trade ideas from Matt trickling in. Diane on the YouTube chat, that's all included. What do you mean all? What are you talking about? All. The newsletters, I'll put the link for the link I'm posting on the newsletters, Diane. The link I'm posting on the chat room, Diane, is for the newsletters, okay? Which is tier 1, tier 2, tier 3. There's different levels. Once you finish completing the starter, it's gonna auto refresh to the enhanced, the next tier pretty much until the tier 3. Starter is 1 pick every 2 weeks. Enhance is 1 pick every week, and the strategy elite is 3 to 5 picks with market updates and a whole bunch of other stuff, trade ideas, sector rotations, all that stuff, more than what you can handle. So Laru, thanks Robert. Shout out to Robert. Robert is the man here. Okay, so Robert, make sure to hit me up. Okay, you got a prize, buddy. What is the number to call? Oh yeah, we did that one, Robert. It's the tier 3 for me, Solana. Yeah, if you want the tier 3, just make sure that when you go to the checkouts, you let it auto refresh so it goes to the next tier. Keep in mind, the only way that you can get like the tier 3 is if you get the tier 1 and 2. Why? Because we've never done such an insane deal, like historically low prices. Inflation's through the roof. Prices are going up everywhere. And somehow prices are coming down here in Benzinga. So I would take advantage of this while it's available. That's all I'm going to say, guys. So $7 for the starter, $14 for the enhanced, $47 for the strategy elite, which is the live call with Matt Maley Monday, Wednesday, Friday with the chief market strategist. Okay, it's not a random call. It's a call meant to get trade ideas and get market updates. Like, what's the point sometimes of you just getting a pick if you don't even know what the hell is going on in the market? You don't even know some people like, I don't know. It's just so important to be aware, guys, of what's going on in the markets, because if some people might be trying to day trade, they don't even know that the Fed is going to talk today, or that just growth is definitely not performing. It's really important to know these things. I know that when everything was going up, most people were like, oh, I don't care about the Fed. I just want, meme stocks. Like, guys, we need to take it seriously. This is a career, it's not a game. It's not a casino for many people. People are trying to make real income with this. So part of that is understanding what's happening in the markets, getting those updates, right? And knowing how to trade around it. That's what Matt Maley is going to help you with. You're welcome, Junior. Phyllis, day trading. What do you mean day trading, Phyllis? Like if he's day trading in the chat room, I'm assuming that's where you're talking about. Can you repost the link? Okay, I'm posting the link for Matt's newsletters. You're welcome, Diane. Okay. So in the chat room, Phyllis, which I think that's what you're asking about. In the chat room, he's I wouldn't call it day trading, to be honest, but if you buy a call or a put and it goes up 100, 200%, like, wouldn't you sell that same day? I don't want to stick to labels, but I probably would. So yeah, if he gives you a call or a put and it goes up 100, 200% in the same day, like, of course, sell it. Like, you don't need to ask anyone. But let's say it doesn't mean that like the majority of the trades get triggered the same day. Like, it could be 2 trading days, 3 trading days, 4 trading days. We're trading the volatility. Volatility is not flat. It's either one way or the other. So we're always trading around that. And with Matt's 40 years of experience in the game, of course, right? Really helpful. Really helpful. Okay. Any other questions, folks? Come on, drop them down. This is your time to shine. You see, Robert won a prize because he was interacting and participating. I told you in the beginning. I told you from the beginning, guys. Robert, I'm going to post my contact there. Email me there once you sign up and everything. I'll give you a special prize for participating. Keep that in mind. Anytime you see these like presentations, workshops, if you participate, you can actually win a prize. Yeah, that's learning and winning prizes and making money with Matt. Like, geez. Amamoni, is commitment a monthly or annual? So the newsletters are monthly. They're yearly, but the link that you have that we're putting in the chat is for monthly. We've never done this before, probably never going to do it again. We're only doing it because we want to help guys get in here, people get into the subscriptions at a lower price. So for $7 a month, which is literally like, I don't even know what to compare $7 now anymore, because prices have gone up so much. Like a carton of milk maybe is like $7 now. So you could choose a carton of milk, a Starbucks, a burger, or financial education, financial literacy, right? Making informed financial decisions, learning from a chief market strategist. I think it's a pretty obvious thing, guys. And then that's the starter, $7 a month. So, and it's going to stay like that forever. You don't change it. So then Solana says she's the next runner up. We'll see. I don't know. You got to prove yourself. Robert's got the crown here. So yes, the starter $7 a month, and that is gonna stay that way forever. The enhanced is 14. What am I saying? The enhanced is one trade per week, and it's 14-day money back guarantee. All the newsletters are 14-day money back guarantee. The enhanced is one trade idea per week, and the ultimate is 3 to 5 plus market updates and all that stuff. All right, document this. Docu this. What level you recommend for a new trader? Depends what kind of trader you are. It depends, like, are you trading? Are you looking to invest? Are you looking to trade, day trade? Like Matt, what he does. So the tier one, let me clear the smoke here. The tier one, guys, is long term. We're talking 2-3 years out. Okay, this is something you want to put, like, just buy and set it aside and kind of like forget about it. High quality names. You're looking at a longer time frame. The stock picks enhanced is a little bit more on the swing side. So you're looking at maybe 6 months, 3 months to a year, maybe. But I mean, look at the pick that I showed you, fast. This was a 1 to 2 month trade. So even though I'm saying 6 months to a year, sometimes you're going to get something that is a little bit on the shorter time frame. And you might have to sell it within a day or two because it already reached the target price. What are you going to do? Book that money. Like, nothing wrong with that. Look at this one. This is from the enhanced, right? You saw me get in there. FAZ posting at $16, planning to sell at $20. This thing already hit like 21 yesterday. So we already sent out the sell alert. We were shorting the banks, shorting the financials. Matt Maley is a beast for knowing how to do all this stuff, honestly. Like, he'll just give you little nuggets of trades and you don't even know how they work, but they work. So this is a great example. Even though the enhanced is a little bit swing trading, this one reached the target in literally a week or two. January 18th, it was posted. All right. You can't make this up. It's literally been like 6 days, less than a week. So same thing for the chat room. He might give you a trade idea and it pops the same day. You don't have to ask for permission to sell big winners. Even though Matt will let you know though. All right, let's go to next couple questions here, guys. Anthea, is the chat room simple calls and puts? Yes, that is 100% what it is. It is only calls and puts. It's not rainbows and butterflies and all that stuff. It's literally just calls and puts. He's trading volatility, and that's the only way he can do that, because in a newsletter it's really hard. In the chat room it's like right away, like, in, I'm out, taking money, let's go, next trade. So, and it's ongoing. That's a good thing. Please drop the link for the enhanced. Solana, I don't have a link for the enhanced. I just have the link for like the starter that takes you to the other checkouts. But if anybody here, just send me an email. All right. If you if you want to go to the higher tier and you can't figure it out, I'll figure it out for you. Just send me an email and I'll answer back tomorrow. Okay, so I think we are officially cool with the questions, right? I think we're good. Robert, don't forget to email me, dude, or you're gonna miss your prize. Oh, I see you already emailed me. Shout out to Robert, dude. We seriously need a Robert all the time here. Just making it more fun where everybody can and you know, don't be shy, people. Like, don't be shy. Ask questions. That's what we're here for. So I want to give a great shout out here to Robert. All right, man. So you know, I appreciate you. Robert in the house. Let's go. And we have Anthea. I'm gonna put like a leaderboard and I'm gonna start keeping track of who's participating and who's not. Okay. I'm gonna start doing that and we'll see what happens. I mean, it's just gonna be more fun, obviously, you know, but is Faz an option trade? No, this was a stock. So like 20% on a stock, you don't even have to trade options. Like imagine if you would have played options. Imagine if you would have done that. Um, so yeah, I'm definitely gonna figure out a way to keep track of who's asking questions and not, and maybe we can give a prize out. Let me know if that's a good idea. If you guys think that's a good idea, or if Robert just doesn't deserve anything. If we shouldn't give Robert a prize, let me know too. Okay, Solana says yes. Okay, I'm in woo. Okay, cool stuff, Karen. All right, guys. So, all right, I'm glad you guys like it. We might do it. We'll see. We'll see how it goes. I'll do my best. Um, so guys, thanks a lot for being here. It was an amazing session. And honestly, I had more fun at the Q&A, like at the end here with Robert. I'm gonna have to book Robert every time I do this. So yeah, very fun, guys. Appreciate the energy. Appreciate you guys coming out here, trying to learn, trying to engage, participate. That's what it's all about. So keep checking out the channel. There's always new stuff out there. There's live trading in the morning. There's a show that like Spencer does as well. There's a lot of good stuff that if you really need like someone or something to help you push through, like discipline yourself with the stock market, with doing your research, I really encourage you to just watch Benzinga YouTube all day because there's a lot of good material, a lot of good content. And you know, it's easy to get sidetracked doing this or that. If you're always watching the YouTube channel, you're always going to be on top of the markets, learning from people, growing, developing your skills. So it's a great resource. That's why you guys are here. All right. So chat room is yearly, Anthea. We'll be talking to you later in the week, Rod. For sure. Tony, what's up, dude? All right, guys. So now, okay, Diane, we'll give Robert a prize. Okay. Robert, no, I'm kidding. I'm already emailing Robert, so we're good. Guys, thanks for being here. Thanks for joining. Appreciate everything. Like I said, shout out to Matt Maley, the monster, the beast here at Benzinga. Join the newsletter, guys. If you want to trade like Matt Maley, if you literally want to trade like a chief market strategist would, join the newsletters. Like it's that simple, you know. Stop following these TikTok kids, these, you know, all this stuff, these Reddit boards, and start trading. You see people take Reddit trades and lose all their money. And this guy, like, you know, like Matt Maley made that like 5,000% put, 5,000% gain shorting the meme stock. So just try to be on the right side of the trade. Don't follow the crowd, follow the smart people, Matt Maley. So thanks a lot, guys. Appreciate your time. I'm going to leave the stream running here. I'll drop the, I'm going to drop the link one more time. Okay. This is the last time, folks, because I'm going to check out here. And, you know, we can talk tomorrow. You can call me, email me tomorrow if you want to talk about the newsletter or the chat room, whatever. Okay, guys, link is posted in the chat, $7 for the starter. That's one pick every 2 weeks. Once you finish that, the checkout, it'll auto refresh. Once you complete that, it'll take you to the enhanced. That is one trade every week. And then once you complete that, it's going to take you to the tier 3. That's the live call Monday, Wednesday, Friday with Matt Maley that you're going to have 3 to 5 picks minimum a week, plus market updates, sector rotations, you know, like stock analysis, a whole lot of stuff that is definitely going to help you. Okay. So this session was great. I know you guys, a lot of you guys learned a lot, but imagine what you can learn if you're trading with Matt every day, right? It's who you surround yourself with. It's the importance of the community. That's why we've invested so much in building the right community here to make sure that you have the right environment, not just to learn, but to be profitable in your trades. That's why you don't see in our chat rooms or anything like that, things like what you see on Reddit or StockTwits, all these spams and things. So the community here is really cool. I promise you that. Everybody that you're going to meet on the chat rooms or the newsletter groups, everybody's fun. Everybody's trying to learn. So Solana, sure. Yeah, sure. No problem. I'll take one here. I'll take one here for you. I'm going to drop my contact as well. If anybody wants to call me or has further questions, even though I think we knocked them out here, but I'll drop that info, guys. Call me if you have questions. I'll leave the stream running. Thanks for being here, and we'll see you guys on the next time.